professional traders have tested this entry technique with almost 50 trades in a row, and I've found that it is having almost 90% win rate. Okay, so now just stick up the end of this video. You'll be able to learn more of this entry technique, guys. Okay, so now this one, as I've told you earlier, that we always consider market structure. Okay, we follow the trend. Okay, so now we always look for the break of market structure, and after looking for the break of market structure, we shall also consider what we call order blocks and fair value gaps, and also we shall add other conferences like liquidity sweep, guys. So now, for example, here, right? So now it shouldn't take you more time looking for the trend or looking for the direction of the market, right? So now after opening the market here, you have to know immediately that the market is bearish. Now for this case, okay, so now for this case, the market is bearish. What shows that the market is bearish? It is here. Okay, this is what shows that the market is bearish. That was a low. Okay, now here it was ranging, then it made another high, right? Then it came and broke that high. This one, it was the clear sign that we have made what we call a market structure shift from uptrend to downtrend, guys. Okay, so now that is the signal that was showing us that yes, we are bearish. So this is it, guys. This is the technique that we always look at. Okay, so now always when the market is buying, now for guess it was a bullish trend. Now it came and broke this low that it left behind, this last low. So now always when the market breaks that last low that it always leaves, okay, so now we consider it in market structure shift. Now it means that the market has shifted, means we have to wait for the market to come to either order block or any fair value gap of our choice, or any fair value gap that it can come to before we enter the trade. Okay, so now after knowing that yes, we are bearish, we have turned bearish, what next? The low, right? After knowing that yes, our low has been broken, after breaking that low, you can see how it behaved. After breaking that, for us, we just come here and we shall see that there will be some order blocks here, guys, right? There will be some order blocks there and some favor gap right here. So you just indicate all of them and wait for the market to come to either of them, then you look for confirmation before entering, guys, right? So now this is our, even we sometimes enter on this 1 hour time frame, right? I'm considering this 1 hour time frame, but sometimes we do even enter from there, right? So now you can see how the market behaved. This is how the market behaved, guys, right? So now it started selling here, started giving us some lows right here. Okay, then you can see when it reached here, yes, that's when we sold from there. So now what did we consider before selling? That's what I want you to know. So now after the market reaching here, right? So now after the market reaching our order block right here, right? So now what do we consider? We have to first look for what we call bearish signals. And what are those bearish signals that we have to look for? They actually have to be you have to look for like 3 to 4 or 2 confirmations that you would consider before entering the trade. So now you can see how the candles were forming right here. It first made some liquidity, right? It first generated some liquidity right here. Okay, so now it first generated some liquidity. Okay, after the market tapping in our what? Our zone, you see the liquidity this market was generating. Okay, that is the liquidity the market was generating, right? So now after that, it came and broke this liquidity, right? That zone, that liquidity was which was being created, it is here. Let me show you. So it created this liquidity. You can see. Then boom, the liquidity was broken here, came back here, then boom, it sold, right? So now that's the first confirmation that someone would use to enter this trade, right? After breaking that liquidity, or after breaking this range, right, that it was generating. Okay, then someone would just enter from there. Okay, someone would just enter from there, right? Someone would enter immediately after the break of that liquidity. Yes, you can enter after the break of that liquidity. Then that means your stop loss would be here, but kind of big, right? It can be big, but though if you are conservative, you can take that, right? And someone can wait for the market to come in and back to come back to retest. Then you put when it retests, that means your stop loss will be kinda small. Then you also target where you want to target, right? So now it is if someone enters from here, it will be actually very good. It will be almost 100 pips when you are risking some few pips, right? Rather than entering from there, right? So now another confirmation, you can use it like on the lower time frame. You wait for what we call a change of character before entering, right? So now yes, this was another break of market structure right here. And after that, you can see it started generating some liquidity here. It started because now this high, it was this high low, it wasn't justified because the low that made actually the low that made that high, it did break this one, right? That means this was not a low, it was not a real low, right? It wasn't justified. That means also this high, it was just as liquidity. That means I would wait for that high to be broken, right? Means we would just wait for some we would indicate some zones right here, right? There is this, you can call it is it a support zone or resistance zone, right? So now right here you can indicate that there, right? You can see, right? When the market reached there, you can see, okay, on that zone. It's when the market reached there, let me show you the confirmations that we would use to enter that trade, guys, right? After market reaching there, you can see what it did. Okay, it started ranging from here. It started even reaching there. You can see, let me show you. This is it, that is a low. Then it created a new high here. Then of course we had to wait for this low to be broken. Okay, after that yes, after that there isn't anything we're waiting for to enter this trade, right? Because after breaking that low that it left, of course that means our market, our direction was justified from here. This fair gap was big, but if you are like, you can take a risk right from here, right? Someone would just take a risk, okay? A risk entry. It was a risk entry from here, from this favorable gap, right? Then you target this low, almost 143 pips, but here the market just moved only 100 pips. Oh, they are really very many. Yeah, if you are to target there.